Today I've got another strategy for you guys going to help you make lots of money in the market. So this strategy is going to help you in the boom and crash market and also in the volatility indices. So watch till the end, because what I'm going to explain here, I'm sure you won't get in any other video, because I'm going to go much in depth. And I'm going to show you how you can enter any type of trader you are, right? If you're a conservative trader or you are an aggressive trader, I've got all those entry methods for you. So stay tuned and watch till the end. I'm using the Ichimoku strategy. That's what I'm going to be showing you. I've been using this for quite a while, and I'm sure it's going to help you make lots of money. So how do you set this up? As you can see, my Ichimoku is a little bit different from what you are used to see. How do you insert this? Just press your indicators over there, right? After pressing the indicators, it's the Ichimoku King Kyong. I'm not a Japanese, so I don't know if I'm spelling it correctly, but I just know that it's Ichimoku. Then what I want you to set is, these are just the default settings. The Tankin San is still 9, the Kinjun Sen is still 26, and then 52. Then here I didn't fill, but if you want to fill, I'll show you what that looks like in a minute. But personally, I don't like to fill it because I want to see what my candlesticks look like very clearly. I want you to copy. You can take a screenshot of this so that it will be easier for you to set, because I want you to copy these colors exactly as they are and set all these to 1 pixel so that it's easier for you to see them. Let me just show you what your chart will look like if you fill the chart. So this is what the Ichimoku will look like. Everything is okay, but as for me, I won't be able to see clearly. As you can see, I won't be able to see clearly what my candlesticks look like. That's why I don't like to fill it. You can choose what looks better for you, what you can see clearly, but as for me, I don't fill the charts. This is what my charts looking like. As you can see, I'm able to see that this is a doji forming over here. That's what I want to see. I want to see the candlestick patterns just as they are. I don't want for me to make assumptions in the market. First of all, I'm going to show you how you can use the Ichimoku to determine the trend of the market, to see if the market is trending or not. So as you can see over here, let me just zoom in a little bit. So this is for your consolidating market. As we all know, the market just moves in 3 ways. Say that the market is moving up, it's moving down, or it's moving sideways, just like this. This is a choppy market. So that's what we call choppy market. If you want to see that if the market is choppy, there's no clear trend, you will see that the candlesticks will keep hovering. If they cross down the Ichimoku, up the Ichimoku, down the Ichimoku, up, right? And as you can see, the colors of the Ichimoku are just changing between what? As you can see here, is green, red, right? So this indicates that the market is choppy. So what do you want to see if the market is trending in a downtrend? Got just perfect example for what? For a downtrend. Over here, after this, so like choppy market, then the Ichimoku is just red, and as you can see, the market was what? Was in a perfect downtrend. It went down for quite a while and even continued further. This is how you tell if the market is in a downtrend. And for an uptrend, it's just the same, just that the Ichimoku will be what? Will be green. So that's how you see, as you can see in this example over here, when the Ichimoku turned green over here, it shows what? That it's a downtrend, right? Now that we are done with that, how do you know when to enter, right? On our entries, I've got 3 methods that you can use to enter, right? Depending on which type of trader you are. So if you're an aggressive trader that trades whenever they see an opportunity without needing further confirmation, you enter before the confirmation happens. So as you can see, you'll be entering when this blue line crosses what? The red cloud over here. This is for your buys. And you want to say you enter when the blue line again crosses what? The green cloud, right? So this is what I'm calling the cloud, right? So this is what I'm calling the cloud over here. So whenever I refer to cloud, just remember that this thick region is the cloud. Let's say you want to enter for your sales, you just wait for this blue line to cross, right? When it crosses, you enter for your sales. You don't have to wait for any other confirmation. That is if you're an aggressive trader. Then if you're a more conservative trader, you have to wait for confirmation. So as you can see, if you are an aggressive trader over here, you just enter when the blue line crosses this green cloud over here. So your entry was somewhere over here. So you entered here. This was a luckier entry because it just went straight into profit. But let me look for an example where it doesn't what? This also went straight into profit. But let me look for an example where there are risks of what? Of a pullback. It seems like all of them we just went straight into profit. But just know that when you enter, when it crosses immediately, that there's a risk of what? Of a pullback, of you losing what? Of you losing that money because what? Of a pullback. Like over here, yeah, exactly. I've got the example after a long struggle, right? So just so that even if you are an aggressive trader, this strategy will still work for you even without using confirmation, right? So right over here, you are entering when the blue line crosses what? The green cloud. So you enter somewhere over here, you hold some bit, then it came back for what? For a pullback. So if you are a scared trader, if you are affected emotionally quickly, I wouldn't advise this method for you, because this pullback will make you doubt your confirmation. It will make you either exit the trade or even lose money. But if you are an aggressive trader and you are okay with it, you are willing to take the risk, I will show show you the stop loss. So of course, after entering over here, you place your stop loss above the previous high. Your stop loss was above over there, so it didn't even pull back up until there. So if you are entering using this aggressive method, the only downside is that your stop loss is going to be larger. That's the only downside. But if you enter and hold, as you can see, you make lots of money. So as you can see from this chart over there, you'll be able to make lots of money. You'll be able to hold the trade for longer, unlike when you wait for a further confirmation. What do you have to do when you want to use the other two methods that are so like more conservative? This video today, I'm not going to be sharing any price action, right? I'm just going to be showing you this indicator only. If you want more videos on price action, just comment in the comment section down below and tell me which strategies or which price action strategies that you want preferably and what you are looking for exactly, and I will make those videos for you. And if this video has been helpful for you so far, like and subscribe, so that if you like this video, it helps the YouTube algorithm make this video reach more people who might find this strategy helpful for them also. So you also be helping this video reach more people. That's the aggressive method, right? Then for the more conservative method, there were two methods, but for the conservative method, it's very rare to get entries. It's very rare to get perfect entries. The aggressive method will of course work more on this when using this strategy, but for the conservative entries, we are going to wait for a pullback. So for the first method, we are going to wait for a pullback to this blue line over here. That's the first entry confirmation. Then for the second method, so that you wait for the candlesticks to pull back to this blue line, or you wait for the candlesticks to pull back to the cloud. When it's just pulling back to this blue line, it shows that the market is truly trending. The market is truly either in an uptrend or it's truly in it's truly in a downtrend. That's just what we have to know, right? So let's take for example over here. So after our aggressive entry over there, right, you can take your aggressive entry over here. It was somewhere around here, so you took our entry over here and your stop loss is over here. That's why I was saying it's so like a riskier method, because there's it's a larger stop loss. But I'm going to show you another method that will make this stop loss a little bit smaller. I'll show you later in the video to reduce this stop loss, to make this stop loss a little bit smaller. After that crossover here, wait for the candlesticks to pull back to the blue line. As you can see, it pulled back over here. And if you see a candlestick confirmation, and as you can see over here, we've got what? We've got our nice doji formation, nice candle resisting to go further up. So this just shows that what we are going to move downwards. Just wait for a confirmation, since you want confirmations, of course, but confirmations are also good because you have got more certainty in that trade. So after that, you just take your entry. So you take your entry over here, and your stop loss goes above previous high, which is around what? Over here. After this small pullback, that's when you take what? Your entry. You place your stop loss above here and take what? You take that entry here and you hold. I also take this as what? A pullback to the blue line, because it didn't reach what? Our cloud. Right over here, after it reaches over here, we'll be waiting for what? For our candlestick confirmation. And as you can see, right over here, we've got this so like small consolidation over here, resisting to go what? To go further up. And when we've got this this large engulfing candle, you take what? You take that position, you take that entry. To make things simpler, for the more conservative method, you just wait for a small pullback, and as long as if the pullback doesn't go above above the cloud, you just look for candlestick confirmation and you take what? You take that trade. That's how I can make this simpler for you. For the two most conservative methods, you either wait for it to reach the blue line, or if it comes and touches this cloud over here, right, as it did over here, touches this cloud, gives us a candlestick confirmation. As you can see over here, it touches this cloud, gives us a candlestick confirmation. So like railroad tracks, but this red candle is engulfing the green candle, so it's an engulfing candle. After this engulfing candle, you enter your sell and you hold, right? And as you can see, you still made a lot of money, though not compared to the person who entered the aggressive entry over here. So after the aggressive entry, you just be looking for those confirmations. So after our aggressive entry over here, you wait for the candlesticks to pull back to this blue line and you take what? Your entry. That's the first method. Or you wait until they reach what? The cloud, and you take what? Your entry. Though of course, as long as if there's a pullback, just like this one, it doesn't touch anyway, but as long as if there's a pullback, and we will just wait for a confirmation and you take what? That trade. You just wait for a candlestick confirmation and you take that trade, because as long as if it hasn't crossed above the cloud, it shows that the market is still in downtrend or is still in an uptrend. Then for the stop loss that I was talking about, for you to reduce your stop loss, you wait if the market goes above the cloud, like it did over here, right? You are in your sell position, you are holding your sell position, and as you can see, if the market comes in the cloud, doesn't respect the cloud, and breaks out the cloud, you exit the trade immediately. You have to exit, even though this later worked out, but you want to reduce our stop losses first in order to make more profits, right? So it breaks out, comes back, test this blue line, you enter again. Just do that and you'll be able to make lots of profit. So this is where the aggressive method is tricky. As you can see over here, it crosses for a buy, and as you can see, it shot right back below, though your stop loss was over here, because this was the last previous lower high, right? though it got broken over here, so your stop loss got hit over here, just to show that this method doesn't work all the time. So you have to practice it first on demo, and I have done the hard part for you. I just found this strategy for you. Now your part is just to backtest the strategy in order to see what works best for you, how you'll be able to make money with using this strategy, implementing it in with your trading style. If you found this video helpful, give it a like, put the like button, and if you've got any comments, any questions, anything that you want to point out, or anything that I missed, leave it in the comment section down below and I will address it.